back to Housing Happenings with Holly. Today, I want to welcome three special guests, Ryan Nelson with AmeriFirst Financial, Sarah Perkins with Clear Title, and of course, Adam Dahlberg with 72 Sold. Welcome.
Hello.
Thanks for having us, Holly.
It was awesome to be here.
Yeah, glad everyone's here. And today, we're going to feature on our podcast about what's happening in the market and rates and how it's a good time to buy. So why don't we start with Sarah?
Oh, you're putting me first, huh? Hey. Well, it's been interesting watching the market move and change the way it has been. We're still seeing transactions happening. And one of the things that I think is interesting, and it's a powerful thing that will make our market actually settle down despite the roller coaster that we've been through the last couple of years, is we are seeing a lot more of today's buyers are not the traditional investors or the big corporate investors that we've been seeing a lot of particularly a lot in 2021. We're seeing more regular people that are moving based on their own life experience, what's happening, their own, because while yes, you can make a lot of money in housing and it is an investment, it's also shelter, which is a basic human need. And so people are moving when, marriage, divorce, babies, or, empty nest, that kind of thing. And that actually smooths out the whole market, because then that way there's constantly movement despite what's happening, in Wall Street or everything else. So that is a good thing, because we are seeing more movement there with owner occupied buyers. That's increased because the biggest challenge to a housing market are vacant homes. And we are seeing people more coming and buying them. We did have a lot of people come and buy rentals. We do have a lot of rentals available on the market, but a lot of those are being filled. And we're actually seeing a decline in the overall inventory, which is unusual this early in the holiday season. Typically, we see overall inventory decline after Thanksgiving, but we're seeing it decline now. We're about 3-4 weeks into this kind of overall decline. It's also declining faster than normal. So once again, we are looking at a very low inventory market likely starting in January, which what that will do is it will stabilize the pricing. We have seen some prices decline and our medians have gone down. We are looking probably end 2022 flat, which means houses will be priced the beginning of 2022 or the beginning of 2023 are going to match kind of the pricing at the beginning of 2022. But if we watch this, if any of our demand picks up while inventory stays low, that will push prices up. And I know that, we always talk about affordability, and Ryan was just, kind of like that's a big, challenge within our industry and within our market for buyers is the affordability aspect. And so as we're watching all the movement that's happening, having the options like the buy downs, and I know you're going to be telling us more about those, but with the, different buy downs, actually roughly 10% of the market of the homes on the market are offering them. So there's some really good things happening that should, hopefully we see more movement from our buyers. And we actually did see a little pop-up of buyers just over the last few days as we have seen a decline in those mortgage rates.
Perfect.
And you're going to touch on the buy downs, and I'll tell you what, Ryan, your marketing on those things must have stretched wide and far. We've negotiated several offers since our last podcast last week, and every single one that came in actually had a built-in buy down 3%, 4%. I mean, buyers and buyers agents are really putting these things in there. They're
Absolutely
very knowledgeable about how they work. And they're just being upfront with them from the beginning. Say, hey, we'll give you full asking. No, that's not always the case, but they're going to give you close to full asking. And then they're always putting in, 3 or 4% buy down. Buyers right now are also, regardless of the price that you have the home listed, they're already going to offer you probably 10% below what's on the market. So the home could be worth $750. We do a $699 sale price. They're coming in at $650, right? They're coming in a little bit below that. It's a crazy, crazy world out there right now, but the buy downs are certainly helping.
Well, if you think about it, it's not that people are really giving away their homes either. We had this massive appreciation over the years, just like in the stock market. You're never going to buy a stock at the lowest price. You're never going to sell it at the highest price.
Right.
So anyone selling today, yes, you're maybe discounting at what it would have sold for previously because the market's changed, but that's expected. You can't have your house continue to go up in value forever. There's got to be some ebbs and flows as the market, and inflation and prices catch up with current market and wages and salaries and things of that nature. But I think 2023 is going to be a really good year for buyers. I think it's going to be a really good year for real estate in general. We had a couple of huge catalysts happen the last, 7 days since we talked. Last week, the consumer price index numbers came in. They were much better than expected. They did show inflation was slowing, had a huge rally in the stock market, and we got an incredible improvement, probably one of the biggest one-day improvements I've seen in the last 20 years in regards to rates, where literal mortgage rates went down, almost 0.75% in one day. So we had a 200 plus basis point move in the mortgage-backed securities market, which is enormous. It took your base mortgage rate, on average from the mid sevens to the high sixes. I've seen some people get, 6.5 for very minimal cost, doing a conventional loan with good credit. And that does help. And that's a huge win for everybody, because people looking to sell, now they have buyers that are willing to make some moves. And yeah, everyone's talking about some of the tools that are out there. And, a buy down is a great way for someone looking to buy a home to make it a lot more attractive while we wait. And we wait for mortgage rates to normalize. And, I think inflation has peaked. I think we're going to start, a slow ride back to getting into the fives over the next 12 months. And it's going to be good news for all of us. I think we're going to have a great year. And from a real estate perspective, there's still lots of people that need to sell. And it's a great time to sell, because now buyers, you've got a lot of options, and you're still going to get, phenomenal price for your home compared to what it was 3 years ago. You still have a lot of equity. What I've seen in the marketplace, from a lending perspective, in talking with buyers, I'm still seeing quite a few people moving here from out of state. And on the flip side, it's, I've got a client that's moving to Arkansas that's retired and wants to be closer to family and is moving there. And I've got one moving to Oklahoma that are both closing in December, and they're just getting the heck out of Arizona. They spent their whole lives here, and they're getting closer to family and just making some changes. And I've got several people referred over from California that are selling their homes and moving here. So, the real estate market's going to be good. It's all about, connection with people and being in front of them at the right place at the right time. And there's lots of people making moves for various reasons. It's always going to be that way. It's life.
Absolutely. We've got a great job market here, that brings people here.
And a great atmosphere. Where else is it warm and with mountains and hiking and great shopping?
You think Ryan, do you think with the advantage of people with their 2 and 3 and 4% mortgage rates that they have right now, I mean, I don't want to call it necessarily an asset, but it's certainly a marketable product for a home. And if they have to move, they have to obviously go up at this point anyway, at least 2 or 3 times maybe what they were. Do you think banks and lenders are going to come back around and start doing like wraps and things again? Is that a possibility?
Well, in the securitization market, where conventional guidelines and those servicers buy those loans, they have a do and sell clause on most of them that don't allow it. So in the future, could that change? It could, but you're talking about most loans are securitized, meaning they're sold and packaged on Wall Street and purchased in accordance to guidelines that Freddie and Fannie have. So unless you see, Freddie and Fannie change their stance on doing that, probably not going to happen anytime soon. However, on government loans, they've always been assumable. So, FHA and VA and USDA loans can always be assumed. And that's never an issue. But on conventional, which makes up the bulk of the market, probably not going to happen anytime soon.
Got it.
Okay.
For a VA loan, if someone assumes it, can that seller obtain another VA loan on their purchase?
They can. The answer is yes. So when you have a VA loan, when you are in the military and you graduate, you have eligibility, and you either have it or you don't. Every veteran ends up with the same amount of eligibility for obtaining a VA mortgage. And the amount of eligibility that's used on that loan that they obtain when they get that first VA loan will determine, based upon how much their loan size is, what their future eligibility is left. And so very often a veteran can go and get a second VA loan, no problem. But if their first VA loan is a larger amount, they may not be able to do 100% financing on that next property. And there's a calculation, there's a calculator, you plug numbers in, you have your loan amount, you have to look on their VA eligibility certificate, how much eligibility is being used on that current existing mortgage. And then you look at what they're trying to purchase on the next one, and it'll determine if they can go 100% or if they need to put down $25,000, and it'll tell you the minimum they need to put down. It's pretty generous though. I will say that even people that have like a $400,000 or $500,000 loan that want to buy another house that may be $400,000 or $500,000, typically they can get into a VA mortgage most of the time for 5 to 10% down. They just would not be eligible to do 100% financing because some of that eligibility is being used and tied to the existing mortgage they have.
Got it.
Now, I know last week you talked about this mortgage calculator, which we think is fabulous. If you want to just touch on it a little bit and tell us.
Well, yeah, we talked about it last week, and I'm sure as an agent you run into a lot of people that, and I see this personally, but this was really built for real estate professionals to share with clients and give them actual factual data to share with people that think they missed out or, rates are too high to buy. Okay. So, the example I had put together, and we can go through the actual numbers because we have them in front of us today. People 1 year ago buying homes and people wanting to buy now oftentimes may think, well, it's not a good time to buy. And so this is basically a really good comparison to share what the actual numbers are if you would have bought a year ago versus buying today. Okay. And there's really three things to look at. If I'm a buyer, whenever I'm doing a mortgage for someone, the two things that the buyer has to know is what's my payment going to be to make sure they can afford it. And then you got to make sure they can qualify for it. And how much out of pocket am I going to need? How much cash am I going to have to part with to buy a home? Those are the two, you think about getting pulled over by a law enforcement, right? Those are the two, red and blue light, glaring items you need to know and you need to make sure that you have and you're comfortable with. So the comparison is this. A year ago, I think it's pretty safe to say if a property was selling for $500,000, what would you be able to buy that property for today? And I think the consensus, and Sarah can really give us more data on this, but I think it's probably a 10% haircut. On average, I think you're buying that property for $450 today, where it was $500 a year ago. But a year ago, people often weren't able to even obtain a property for $500 that's listed for $500. They were paying more for that property because of inventory shortages and bidding wars. So let's assume they paid 5% over. So the offer price is $500, but they actually paid $525 for the home. So if someone was putting 20% down a year ago, they would be parting with $125,000 to buy that $500,000 property. $25,000 over the actual asking price because of a shortage of inventory. Putting down 20% is $100,000. They'd be parting with $125,000 out of pocket. Today, if you were to buy that same home for 10% less, $450,000, you'd be parting with $90,000. So we're talking about a $35,000 difference. And the second thing to look at is what you owe on your mortgage. You would owe a year ago $400,000. Today, you only owe $360,000. So significantly less, $40,000 less, which in essence is equity down the road, and it's $40,000. And then the third thing to look at is what's the monthly payment. Okay, so a year ago, rates, let's be realistic. I've seen stuff on the internet, people posting examples saying payments are exactly the same a year ago versus today. Probably not true. They could be the same if you buy down the rate for temporary time period, 2 years. But the actual numbers a year ago, I think it's safe to say rate was 3.75. And today, with the improvement we got last week, which was phenomenal, we're about 6.5. So the payment, principal and interest a year ago, okay, was about $1,852. Today, it's $2,275. So it's about $400 a month higher in monthly payment today. But again, does that mean that it would have been better to buy last year? Well, number one, you'd owe $40,000 more on the mortgage. And number two, you'd have $35,000 less in the bank. If it's me, I would much rather have a little bit higher interest rate, especially knowing and having the knowledge of where we're at and what is supposed to happen in the future, and that rates are at elevated levels on purpose to slow down inflation. So, your payment's $400 a month higher, but you have $35,000 more in the bank. You owe $40,000 less. That is huge. That's a big difference. We're talking about $75,000 difference. And your payment's higher. Now, if you did a 2-year buy down, and again, this example it doesn't take into account a year ago, were you able to get seller concessions on any property?
No.
It wasn't happening. And I think it's safe to say that the answer is no. That was not a possibility, especially if you're paying over appraised value. So, or over asking price. But if you did a 2-year buy down, even at 6.5%, so you have a 4.5% rate on that lower mortgage amount, your payment's actually $28 a month less today. And it's very commonplace. You said earlier, Sarah, that we have over 40% of properties that are offering seller concessions. Adam's, using that as a tool. He's seen it on offers coming in. I know Holly's been, talking about this, and your payment's actually less and you have $75,000 more in the bank. Or, you have more money in the bank, you have a substantial better equity position, but it's a $75,000 difference. So,
and I just did that math, Ryan. So that $400, even if it's an increased amount of monthly payment of $400, based on the savings that you just said, it's 187 months, basically 187 payments to make up that difference, which is probably it's just over 15 years, between 15 16 years.
And the head of Freddie and the head of Fannie Mae has said that they see rates going back into the 5s in the next 12 months. So, doing a temporary buy down from 6.5, doing a 2-year buy down, if you did a 3-year buy down, now your payment's $230 a month less.
Right.
This is from that original number.
Correct.
That's a big deal.
Adam's seen 4% seller concessions. 3 is kind of the norm that I've seen. I've had several contracts come in over the past, week and a half where we've got 3% seller concessions. So you're able to do a 2-year buy down for someone if that, makes the most sense for them. And it's so back to the original, discussion, and really the point to take away from this is it a good time to buy? Well, you tell me. You got a $75,000 difference between equity and money in your bank, and your payment can be less if you do a 2-year buy down. It's about the same, $28 a month less, or you can have a little bit higher payment and have that $75,000 difference. In the payback period, 187 months, rates are going to be lower, hopefully. And I think they really are, though. I mean, that's what is being forecasted. And we are seeing good trends with inflation and the things in the marketplace. And so a lot of those economic numbers that we're getting, the producer price index came out yesterday, was more favorable as well. And we're headed in the right direction. So I think 2023 is going to be a big year for buyers. It's going to be a big year for real estate in general. People are going to start, saying, what? It's becoming more affordable now. There's more affordable options. They're going to be, ready to go and stop paying rent.
I think that's huge. And, there's one thing to also keep in mind when you have, mortgage is, what is it? The tax deduction from the mortgage interest. So, even if you're paying a little more, it's still more that you can put on your taxes. So it's always one thing, not tax professional, but always want to remind people there are tax benefits of having a mortgage.
Right.
And what are some of the programs out there right now, Ryan, with the like payment assistance or down payment assistance for buyers?
Well, the number one program in Arizona is called the Home Plus. And it's a great program. They'll give you 5% towards your down payment and or closing costs. And it's a loan that they give you. There's no interest. There's no monthly payments. And literally with getting seller concessions in conjunction with that down payment assistance, you can get a buyer into a home with absolutely no money out of pocket. They're going to have some earnest money, obviously, to solidify the contract and, show that seriousness that they want to buy it. but that can be refunded back to them at closing. I've got a client under contract right now that has 3% in seller concessions, and they absolutely will close with not one dime out of pocket.
It's great.
Wow.
So there's great options. That's been around for a long time.
Yeah, I've done that a lot.
And the rates got really high. So let's go back before some of the economic numbers came out last week. The rates were in the mid to high sevens, and today they were 6.625. On an FHA loan, FHA loan, getting a 5% loan. And they do have some forgivable loan options as well that have a little bit higher rates, but right now they're not an option because of how stuff is priced in the bond market. But there is an actual loan that you can get that will take care of those things for you. And the great thing about that loan, even though you have to pay it back, you don't have to pay it back till you sell the home, and there's no monthly payments, and there's no interest charges for that loan. So DPA is a great option for people. Your debt to income ratio is pretty generous as well. If you're under a 680 credit score, you have to be at a 45% debt to income ratio. And if you're over 680, then you can go to 50. And you have to have a minimum 640 credit score for the AZ Home Plus program.
Good to know. Adam, you want to tell us a little bit about some of the success stories we've had this week with our 72 sold 8-day selling homes?
Yeah, well, we've had a couple closings. I think we got 3 or 4 homes under contract this week. So it's moving along. I see buyers starting to come back into the market at really an unbelievable rate. It was pretty rough there for a couple of months, right? It was full shutdown. But they're coming back for various reasons. These new loan programs, buyers becoming aware of doing rate buy downs and things like that. And so I think the outlook is positive. I don't see a huge collapse that everyone's kind of worried about. Really, the big problem I think that we have is just getting sellers to understand where the market is and to get their brains unwrapped from what their neighbors did a year ago to what the current, values of their homes are, and to show them, where market demand is. Luckily, with our program, with the 72-hour program, through our 8-day selling process, we're able to show them what the market demand is for these homes in a very condensed amount of time, and allow them to decide if it's the right fit for them. Unlike a traditional type sale, we're not handcuffing our clients to, look at just one offer at a time and make sure that they accept that and really push them to, take the only offer that's on the table. At the same time, we're not allowing either Zillow or an appraiser or some other realtor or the neighbor to dictate what the value of their home is or what their neighbor is sold for. Really, the market demand is what's going to eventually, be the top number for their home. Whether it's a house, whether it's a piece of artwork, whether it's a car, the market will always speak. And so through our marketing program in an 8-day period, we can show them what the market will pay them for their home. And then at that point, they can decide whether it's a good fit and a good number for them. The good news is that, again, the number that they are going to get, even in a market that's been declining over the last, 6 months, 7 months, is still going to be more than they would have made a year or two ago, or maybe let's say 2 years ago, when we had a stable market. So they've gained about 60% equity. Is that what the number was over the last 18 months?
3 years is 65%, even after the declines that we've had. 5 years is 85%.
That's unbelievable.
And then we have independent studies that say that our program gets sellers 12% higher than traditional real estate. And I, after being in traditional real estate for probably at least 18 years, really can say that this program works. And when I had to sell my home when my mom passed away and I was working for another traditional real estate company, I even chose to come to 72 Sold because of the program and the results and the training of the agents. And I was working with this spectacular team in traditional real estate.
Here's a funny story. We just went under contract with a property yesterday over in North Mesa, kind of nice area, old school, Lehigh area, big homes. And the sellers just purchased the home a year ago. In fact, it was a year ago in October of 2021, they purchased it. Nice house, basement, kind of older neighborhood, very well established. And their life situation just changed. They ended up wanting to move out of state. And so we put the house on the market. We showed it to about 5 groups last weekend. We went back, renegotiated. We just went under contract yesterday. They are going to make $170,000 on a home that they bought less than, just about a year ago, 1 month over a year ago.
Wow.
It's more money than they make in a year at their job, right? So they're walking away with a profit on this home, even as the market kind of crashed over the last 6 months. They're still making more money.
Just correcting.
Correcting, sorry.
Yes.
Different C word. So as the market changed, they are still walking away from a very profitable investment, if you want to look at it that way. They didn't buy it as an investment. They weren't trying to flip the home. They were buying it as their family home. And quite honestly, the home is in worse condition today than it was when they bought it, because they started some projects, they started some home renovation. They just couldn't finish them in time. And here they are making a significant profit on something. So it sounds like doomsday every time you pick up the newspaper, right? Every time you listen to the news. In reality, it's a good time to buy. Home prices are stabilizing. So there are more homes out there, which gives buyers better deals. But at the same time, it's still a very strong time to sell if you are looking to sell, because as these homes continue to go up in value, you just have to be more strategic on how you sell it. Luckily, we have a program that can do that in a very condensed amount of time.
Right. And Adam and I this week, we just did a home in Scottsdale. I don't think we've had it on the market, 7 days. And we have 2 offers. And the owners of that home are just having life situation changes, really nice home. And they're going to make a nice profit and be happy.
A great profit, yeah. They don't owe anything on that home, do they?
Mm-mm.
Yeah. Unbelievable. Such a great investment, right? We said it last week. When's the best time to buy a home? It's the same time it was to plant a fruit tree 10 years ago.
Always.
Yeah.
But that's the thing. It's like anytime you start, everybody, especially the first time you buy a property, it can be a little, scary to dive in and be like, okay, wow, I'm going to do this. I'm going to be a homeowner. But then when you look back, even just a short time later, like you guys were talking about, and just saying, look at this benefit and this growth. Now, if that property stays the same as, suiting their needs, great. If not, and they need to adjust, a lot of times, by being able to, get in and build up and then sell for, more. It doesn't have to be the 50% increases we were seeing in very short time. If you have even a little bit, it still allows you to go and move to that next property and get in, put the money down and grow. I mean, the second house I ever bought, my first house, I thought I won the lottery after owning it for 5 years, and I made $35,000 off of it. It was like the most exciting thing. And here, you just had one, a couple that owned it for 1 year and made $170,000. I mean, these are giant numbers regardless. And it is life-changing.
Absolutely. I mean, I came from very humble beginnings, and I've been blessed and lucky enough to make my wonderful nest egg mostly from real estate, and just by buying and selling. And why rent when you can own something, get a tax deduction, like you said, and, even a condo that I bought for my daughter. We probably have $100,000 profit just in a year, even with this.
So,
I think that there's a big hurdle to overcome, especially with the new generation coming in. What are we at now? The Gen Xers, Gen Z, Millennials. How old are millennials?
Gen Alpha is the new one.
Gen
I
Alpha.
thought it was Z. Is there?
No, Gen Alpha.
They're starting over again, huh?
Well, my youngest is 13, and he told me he's a Gen Alpha.
I guess
Gen Z. I'm Gen Z.
Who are the newest buyers in the market right now?
The Gen Z.
The millennials. Okay.
Well, the youngest millennials are
30. And then after that, you got the Gen Alphas.
What about the mid-20s?
We'll have to go back and look.
Yeah,
I thought those were.
Who's the TikTokers?
You got Gen Xers. You got Gen Zs.
The TikTok.
The TikTokers, the 20s.
Yeah, right. Gen TikTok.
Well, you're millennials.
Yeah.
And younger too. There's some.
I feel that group, they went through a very traumatic time in the mid 2000s or 2010, when they saw their family members, they saw their parents, maybe they were in a position where they got foreclosed on. Very traumatic. If you drive out where I live in the Southeast Valley, Gilbert area, every intersection has a new apartment complex going up. I mean, it looks like, it's like Battlestar Galactic out there with their forts and it's just these massive properties of rentals. And so you have these millennials or Gen X, whatever age they are.
Gen Alpha.
Gen Alpha. Well, buyer, like 18, 19. People that saw the hardship that their parents went through. To them, it's just easier to rent, right? How easy is it to go into an apartment complex, fill out an application, get approved. You put down a lot of money, $7,000, right? You need your first month, last month. And if you look at the prices that apartments are going for anymore, it's, two bedroom apartments, $2,800 in Gilbert, right?
2,500.
It's like 900 square feet.
Oh, yeah.
Are you kidding me? Now they're really nice. Don't get me wrong. Luxury pools. My buddy lives in one. He just he throws his trash out in front of his door, and then somebody comes and picks it up in the middle of the night or whatever. So they really try to provide a nice environment for these rental properties. And I could understand why somebody would want to do that because it's just so simple. But then you have and think, well, if I buy something, I need all this money down. It's a complicated process. I have to fill out 1 million applications. It's just too much. I just want to go and check in and be done and have my place. So I think maybe some success of companies like maybe Rocket Mortgage, right? You go in, you click a couple buttons. That was their marketing scheme, right? Come in, 2 clicks, done, get approved, go buy a house. Really easy. So if you get teamed up with a really good lender, Ryan, for example, who, he can make the process all just kind of behind the scenes where he just gets a little bit of information from you, name, social security number. But what else do you need for a mortgage application? Like 3 minutes on the phone, right?
Literally it's 5 minutes or less.
Yeah.
And there's really 2 things you look at. Okay. What is your income and how's your credit?
Yeah.
And that will determine everything you need to know about how much you can qualify for. And along the lines of what you're saying, I mean, the biggest thing for people, should they buy a home and does it need to be, it's not complicated. Okay. You have to live somewhere and you're either paying an amount to live somewhere or you're not. Now, if you're lucky enough to live with mom and dad or a friend and not pay any rent, fantastic. Okay. But you're not going to build any wealth, but it may be free. Most people have to rent. They have to pay somebody. And does it need to be overwhelming or a complicated decision? Not really. How much are you paying in rent and how much do you qualify for and what does it look like to get into a home? I mean, it really is that simple. And then you determine what you can qualify for. And that's a function of really your income and making sure your credit. And, even if someone doesn't make a lot of money, if they have good credit and they have a 2-year job history, you'll qualify for a mortgage. It may not be very much, but you will qualify for a mortgage. And
that's how you start.
Well, and what Adam was talking about earlier, yes, there are down payment options that can help you so that you absolutely can get in with no money down. It is happening. It hasn't happened for years. We haven't been in an environment where you could get the seller to pay your closing costs. And, anytime you do a mortgage, there's always 2 sets of costs. They're very different, but there's always 2 sets of costs. There's down payment and there's closing costs. The down payment can come from friend, family, your own funds, a combination of both, or some sort of nonprofit like the Home Plus or one of the different DPA, down payment assistance programs that are available. There's a bunch of them. They work. They give you money for that down payment. Your down payment is covered. The closing costs, okay, typically that's on average 2% of the purchase price, and that can be covered by the seller. And right now, there's over almost 50% of real estate transactions have the closing costs being paid for by the seller, or they're giving you money to buy down your rate, or a combination of both. And I did look it up while you guys were talking. So we got the baby boomers. We all know baby boomers were through 64. So 46 through 64. And before that, do you know what they were called? Anyone?
The greatest generation or the silent generation?
Well, the greatest generation was turn of the century. And before that was the lost generation. Greatest generation, 1901 to 1927. But from 1928 to 1945, and I've never heard this. Any thoughts? The silent generation.
Interesting.
Baby boomers, 46 to 64. Generation X, 65 to 80. That's where I fall in. Millennials or Generation Y, from 81 to 96. Zoomers or Gen Z, 97 to 2012. And then early 2000s through current Generation Alpha. So
good to know.
You've got to live somewhere. It's easy to qualify. And the thing that's great is if your credit's not good, it can be improved. Nothing is permanent. Everything on your credit is temporary.
And then working with Adam and I and Ryan, we have the process. We'll take you through it. We're a great quarterback through the system. And I've worked with lots of clients, especially when I've been a Zillow Premier agent, getting people homes with no money down. And now is a wonderful time to do it.
Yeah, we had in 2021, it was, you could sell anything. And in 2020, with the properties could be anything, but it was tougher on some of our buyers. Now we have a great time for any type of buyer out there. They can get a loan, they can get into a property. So even though I know buyers were ignored before, this is the time for the buyers. We can really get them into properties and there's options for them. So I think that it's like you guys were all talking about, there's a lot of opportunity out there right now.
Yeah, I just want to thank everyone for joining us and all our new friends for listening and watching. And please remember to tune in next week. Bye for now.